Now, friends, we will discuss the remaining aspect of marine insurance. That is Unit 5, General Insurance. In that marine insurance, the remaining three important points we need to discuss in this lecture series number 6. So, the discussion points are important clauses in marine insurance. Then marine insurance policies and marine risks. So let us understand what is the clauses, what is the meaning of the clauses in marine insurance. We have already seen the features of the marine insurance and types of the marine insurance in the previous lectures, where we have already seen the marine insurance principles such as utmost good faith, insurable interest, and all that. Now these clauses are something different than the principles. So the clauses are nothing but the conditions and terms and conditions upon which the insurance contract is agreed between the insurance company and the insurance policy holders. In case of marine insurance, there are specific kinds of the clauses that are inserted in. The important clauses in marine insurance there are around 15 important clauses. What is the clause? Clause in the marine insurance refers to the terms and conditions mentioned in the marine insurance policy. There are around 15 important clauses mentioned in the marine policy. The first one is called as inchumary clause. The first one is called inchumary clause. Inchumary clause defines the loss due to negligence of the ship crew. So inchumary means the loss caused due to ship crew. Means as we have already seen earlier, in the ship there is a battalion of people called crew who are working in the ship. The main person of this crew is called as a captain of the ship, who is driving the ship. When the truck is being driven, the truck, when it is run by the person, is called as a driver, whereas the flight is called as a driver of the flight is called as a pilot. Like that, the driver of the ship is called as a captain of the ship. So the captain of the ship and his crew, if they make any mistakes, if there are any losses arising, it is mentioned under the inchumary clause. In the inchumary clause, the insurance company will define how the losses arising out of the negligence of the crew is treated, whether it is borne by the insurer or should be borne by the insurance policy holder. If it is to be borne by the insurance company, then insurance company will issue the certificate of clearance for voyage of the ship. And if it is not covered under the insurance contract, then the insurance policy holder, that is the owner of the ship himself, has to take the risk and responsibility of the ownership or the losses. So in the inchumary clause, the failure in maintenance of the vessel is covered. If at all the vessel maintenance is not properly done, fuel is not properly put in, then the turbines and things are not, boilers are not properly checked out. Due to that, in between the transit, if there is any problem happens and boiler explosion happens, or ship turbines gets stuck, or any machinery default arises due to the negligence of the crew in checking it and maintaining that, if it is covered under the insurance policy, it is mentioned under the inchumary clause. Then the second important clause is capture or seizure of a vessel. How the loss arising out of this capture and seizure of the vessel is treated is mentioned under this clause. It is mentioned in the insurance policy. This clause mentions the loss arising out of the vessel seizure. Seizure means capturing the vessel by the banker or any other authorities for not paying a loan or taxes. If the banker who has given the loan to the insurance owner, and if the insurance owner has not repaid, and there are the defaults of the insurance loan installments, in such cases the banker may exercise the power of seizing the ship. In that case, if the ship is seized, there is a huge amount of loss arising to the owner due to delay in transfer of the cargo, or due to some other problems, and all that losses, if it is covered under the policy, it is mentioned under capture or seizure of the vessel. And in certain cases, if the ship is not paying taxes to the dock authorities, what we call as the port authorities, and if the cargo freight is not the tax is not paid, like import duty or export duty, in such cases the ship may be seized by the tax authorities. In that case also, if at all any loss arises, whether it is covered by the insurance company or it is to be borne by the owner of the vessel, is mentioned under this capture or seizure vessel clause. Next, third one is suing and labor clause. Suing and labor clause is the expenses incurred for the labor cleaning the vessel in the port after the loss or damage incurred in mentioned in this clause. In the case that if at all the repair has to happen, or if at all the vessel undergoes any kind of a tempest and storm, lot of dust and sand will come inside the ship, and the cleaning of the ship has to be made. Cleaning expenditure is in lakhs, and if at all the cleaning expenses are also covered by the insurance policy when the loss has happened, then it is mentioned under the suing and labor clause. Here the insurance company will clearly state whether this loss is fully borne by the insurance company or fully borne by the owner of the ship, or it is divided, partly paid by the insurance company and partly paid by the owner of the ship. That is being mentioned into this clause. If this clause clearly defines that if at all insurance company has to bear this cost, then the suing and the labor expenses will be borne by the insurance company. Then fourth one is we have valuation clause. The amount of compensation to be made for the maximum value of loss covered is mentioned in this clause. In some insurance contracts, the value of the marine insurance contract, the value of the ship or the value of the cargo is mentioned. What would be the maximum amount of the loss or compensation to be made by the insurance company to the insurance policy holder is mentioned under this clause. In this clause, the maximum loss is paid only when the full loss happens. So the valuation, the sum assured value is mentioned under this clause. Under this clause, the fifth one is at and from clause. That is duration, time, or time period of the risk coverage is made here. In this clause, the duration of the policy is mentioned. There are different types of policies based on the time. There are certain policies where the whole year is involved. During 1 year, whatever the transportation happens between the two different ports of the two different ports, whatever the transport happens, the vessel and cargo, they are covered under the policy. So that is 1 year duration. Sometimes the time duration would be for only one particular transaction, one particular transport. Say for example, India to America, if the goods has to be transferred, only one transport may be covered, or if at all several transport transactions will happen, several transport fleet will happen, then in such cases the duration of 1 year is taken. Whatever the loss happens during 1 year of the transportation to any of the ships during that particular time is compensated. So the duration of the policy and the compensation period will be mentioned under this clause, that is at and from clause. Then third one is we have a memorandum clause. Memorandum clause means the loss happened to the cargo due to perishable goods loss, or loss due to the cargo happening due to certain climatic problems which reduces the quality of the cargo shipped in the vessel. So this memorandum clause defines clearly whether the perishable goods loss is covered under the insurance contract or not, whether the whether the non-perishable goods or destroyable goods are loss is covered or not. In certain cases, memorandum clause talks about, if the memorandum clause is not mentioned here, that is 5% of the perishable cost loss is paid by the borne by the insurance company. In certain cases like sugar and all that, where perishability is not there due to moisture, that is due to the loss due to the problem happened to the vessel, which is stopped in between the transportation in the ocean, may lead to loss of the sugar or some other materials which will because of moisture. In such cases, up to 50% of the loss would be covered. If this is particularly mentioned here, the in memorandum clause, the insurance company will define how that loss is treated, whether that perishable goods and some goods which are listed, whose quality, if it is deteriorated, whether it is the loss is borne by the insurance company or not. It is mentioned in this clause. The 11th important one is the name clause. Name clause is the name and technical details of the ship is mentioned here. As you know that every train is given the name, like Shatabdi Express, like that. The ship is also given particular name, and the name of the ship is mentioned in the clause. If it is mentioned in the clause, any loss happened to that particular ship in that particular voyage or a time duration is compensated by the insurance company. Under in this clause, name and technical details of the ship has to be mentioned. Name and technical details of the ship has to be compulsorily mentioned. And next one is the name of the crew. Name of the protocol as that is not written here. And the 12th this one, the name of uh, the name of the captain has to be mentioned. In certain cases, the captain name is mentioned, where who is the person who leading that particular ship, because his skill and qualification is most important. And if the person is riding that vessel or that ship, and ship gets damaged, then insurance cover may be provided. If any other person in his place is driving and is leading the ship, and ship gets damaged, in such cases the insurance company may deny to pay. These two clauses, that is the name clause, the ship name, and then the what do you call as driver's name, that is the captain's name, can be changed with the prior permission of the insurance company by giving the reasons. Sometimes what happens, the cargo which is shifted, which is to be shifted through particular vessel, if the vessel is under construction or under repair, in that case it can be that cargo can be shifted through the transported to some other ship. In that cases, the cargo owners have to give a clarification to the insurance company and get the name of the ship changed. Or in certain cases, if the vessel owners cannot employ or depute that captain who is to transfer, who is to lead that particular change, is not attending the job due to health reasons or any other calamities, any other problems, then new person is, any other person is sent in his name, the permission, prior permission has to be sought from the insurance company, and the change has to be implemented. So this is point number 11 and 12. 11 talks about the name clause for the name of the ship. Second, 12th one is the name of the crew. Name clause for the crew or the captain has to be mentioned. So these two clauses will compulsion the specific name authorities involved in the ship transportation. 13th important one is the expected peril clause. Expected peril clause is the risk covered in the insurance is mentioned here. What kind of a perils of the sea are covered? Whether the storm risks are covered, whether the fire and burglary are covered. So those things are mentioned. If in certain cases, if the comprehensive policy is taken, comprehensive policy means all types of the peril losses, that is hazards of the ship, if they are covered, it is called as comprehensive. In this clause number 13, if it is a comprehensive risk, it is mentioned as a comprehensive policy where all the ship, all the sea related risks are covered, or ocean risks are covered under the policy, loss happening due to any other problems, risks. And if it is not a comprehensive policy, and then in clause number 13, it is specifically mentioned which kind of the risks or hazards are covered under the risk. If at all loss happens due to that particular hazards which are mentioned in the clause, are only compensated. Like for example, if you have mentioned that collusion of the ship, and instead of collusion, if the ship gets fire inside, then the insurance company may not cover the risk, because the risk loss has happened to the ship not because of the collusion, but because of the problem in the technical systems and the fire has incurred. So this is how this clause deals with. Then next one is the salvage clause, that is treating the salvage of the ship after indemnifying the whole loss. If at all the whole loss is paid, if at all the sum insured total value is paid, then the right of subrogation is exercised by the insurance company. In that case, how the right of exercise subrogation is exercised, and what would be what would be done with the salvage of the ship, the authorities of the insurance companies regarding the salvage rights are mentioned in this clause. The last one is a continuation clause. The term relating to continuation of the policy after term is over is mentioned here. Now, in this continuation clause, if at all the time period is expired and if it has to be continued, the grace period is mentioned here. And if the insurance policy holder, even if he does not pay the insurance premium during this grace period, the risks are covered. And after the grace period, if at all he pays the amount, it is continued. So that terms and conditions relating to the validity of the time of the insurance risk coverage is mentioned under this clause. So these are the important 15 clauses which are mentioned in the insurance in the marine insurance contracts. And now types of marine policies. Types of marine policies. There are various types of marine policies. That is voyage policy, time policy, mixed policy, valued policy, unvalued or open policy, port risk policy, floating policy. In our previous discussion, also in the lecture series 6, lecture series 5, we have already seen the different types of marine insurance. In different types of marine insurance, we have already seen the hull insurance, the cargo insurance, then the liability insurance, like that. In each of the insurance, that is in hull insurance, there is a voyage insurance, slice, time policy, voyage policy, mixed policy, valued policy, like that. These are the different types of policies mentioned under the different category of insurance. So students, please don't confuse while you are writing an answer for the question. If the question is asked to discuss the various types of marine insurance, then you write that 4 important marine insurance types. And if you are asked to describe the various types of marine insurance policy, then write these important 7 marine insurance policies. Now, voyage policy. Voyage policy, the route of the ship transport is mentioned in the if the policy mentions the route of the ship to be transported, it is called a voyage policy. It means that compensation will be made only if the accident happens or collision happens to the ship when it is passing through a particular voyage which is mentioned in the clause, that is being accepted, that is being compensated. So voyage policy always restricts the transportation route for the ship to transport. If the voyage route is fixed, it is called a voyage policy. If it is not mentioned, then it is an open policy. In an open policy, the ship may travel anywhere, but all the risks are covered by the insurance contract. This is what we call as voyage policy. Then we have time policy, where the time framework is mentioned. That period of the risk coverage is mentioned, whether it is for one particular transport, one particular destiny transport. Say, for example, in the month of April, when the goods are transferred from India to America, that only one transportation tour is covered. It is called one-time policy for that particular transport. After the goods are reached and the ship comes back, any loss happened to the ship is not covered. Then if it is mentioned for, if they tell some of the insurance, some of the ship authorities will be transferring the goods from India to America regularly, they may take 1 year policy. Any that ship which is taking the goods from India to America and America to India back, that all the risks are covered during that particular time framework of 1 year. This is what we call as time policy. Mixed policy refers to the policy which covers the time policy features and voyage policy. If both are covered, it is called as mixed policy. In mixed policy, the voyage as well as time framework are mentioned. This is called mixed policy. Then we have called one more called as valued policy. Valued policy, the insurance compensation is mentioned at the time of the loss. At the time of the loss, the insurance compensation is mentioned. If at all it is mentioned at the time of the entering into a contract, it is called as uh, valued policy. If it is not mentioned, unvalued policies are the policies where at the time of the loss, estimation of the loss is made, and whatever the loss happens is compensated by the insurance company. In case of valued policy, the insurance compensation is mentioned at the time of not loss, at the time of taking the policy. That maximum loss which is happening within that particular limit is covered by the insurance contract. Any loss happens beyond that, the insurance owner has to, that is the ship owner or the cargo owner has to suffer from that particular, has to bear that loss. Unvalued in the sense, it is called an open policy where no value is mentioned. And what is mentioned here is any amount of the loss happened at after the risk of the perils of the sea, that is estimated and the whole amount is paid like that. It is called as unvalued policy. Then we have sixth one is port risk policy. Port risk policy in the sense, most of that insurance policies cover the risk when the ship is doing a transportation in the ocean. So sea perils are covered normally. But if it is a port policy, port risk policy is one when the ship is idle or standing in the port. In the port also there are certain kinds of hazards happen, and losses may happen to the ship. Like for example, heavy tempest or heavy storm may destroy or collapse the ship. There are chances like that. Or lightning happening on the port side to the ship, and ship may get damaged or may get burnt. In such cases, the port risk policy is taken. In the port risk policy, anything loss happens to the ship or to the cargo loaded in the ship are getting damaged on the port, in the port, in the dock side, then that risk is also covered. That is called a port risk policy. Then we have a floating policy. Floating means when the shipping corporation is doing a number of ship transportation to various kinds of countries, not only from India to America, maybe India to Russia, maybe India to some other countries. When the fleet policy is taken, any kind of the loss happen to any of the ships transferring between from that particular shipping corporation, the losses are covered. There is no specific ship or specific voyage or specific time is mentioned in the policy. It is a floating. This is similar to the floating policy of fire insurance. In the case of fire insurance, when the goods are stored in different godowns, anywhere the godown loss happens to the stored goods, the fire insurance is going to cover. Like that, the same policy is here in the marine insurance policy. Any ship, any kind of the ship doing a transportation pertaining to that particular shipping corporation, shipping authorities, will be covered under the policy. That is called a full floating policy. It is a single policy covering the various ships owned by the shipping company. Then we have marine risk. Marine risk. There are certain marine risks which are covered. Many marine risks hazards which are covered. That is what the scope of the marine insurance risk coverage is called a marine insurance risk coverage. There are many marine hazards which may create a loss. These risks are classified into following ways. One is weather risk. Weather risk means the loss arising out of the weather risks such as tempest, hazards, hurricanes, etc. That is due to weather conditions, changes in the weather, there are certain kinds of losses may happen to the ship while doing it while traveling in the ocean. That is maybe a tempest, hurricane, or kind of a big weather conditions, heavy rains, lightning. So these are all the risks which are classified under the weather risk. So insurance policy will cover all the weather risks which are anticipated and mentioned in the policy document. Then there is a geographical areas in the ocean risk. There are certain geographical areas where the risk will be happening due to certain accidents, and goods, cargo, or the ship will get damaged. They are called as geographical. The terrain of the sea is not even. It is uneven, and it may not be known to the ship owners or the what you call as the captain of the ship. And due to the unknowingly, if at all the ship gets collusion to the rocks or to the icebergs or to the sandbars, these are called as geographical risks, because risks happening in that particular geographical area which is not known, which is not clearly defined, and risk may happen. These risks are also covered under the insurance policies. Accidents because of coral rocks. Coral rocks means the rocks below the sea where the ship may get collide to these rocks. And there is a sandbars, huge sandbars which are very hard, may create a damage to the ship, or icebergs which cannot be easily seen from the farthest distance, because icebergs are floating on the sea surface to a little extent and may not be observed so easily by the ship crew, and may get collide and loss may happen. So this is also covered under the geographical area risks. Then third one is technological failure risks. Technological failure risk. What is a technological failure risk? Technological failure risk is a failure of the machine, or failure of the system of the ship, and creating the problem, and risk may arise. It may be explosion of turbines, boilers, short circuits, etc. Because of what you call as a maintenance problem, or many, any because of unexpected things. Like sometimes even the fuel tank may get is exploded due to heavy heat or heavy pressure, storm pressures and all that, it is going to happen. These are all called as technical failure risks. Then fourth one is cargo risk. Cargo risk means cargo which is shipped inside the ship, in the ship, for transportation of the goods from one port to another port. Damages may happen to the cargo. Damages may happen to the cargo. That is called cargo risk. Maybe because of jerks, climatic conditions, etc. If the cargo gets damaged, it is also covered under the insurance contract. Sea perils. There are another kinds of sea perils. Sea perils are the animal collisions. Certain kinds of animals in the sea which may collide. Like for example, heavy sharks, or big kind of whales. They are going to destroy the ship certain times, if at all there are certain situations, like then crocodiles, or any kinds of heavy fish stucking in the fans inside that particular ship, and create a technical problems. These are called as a sea perils. And heavy water forces, sometimes storms, sometimes they are called as sea perils. Then there are certain man-made risks are also sometimes covered under the insurance contract, if at all it is properly negotiated between the insurance company and the policy holders, if it is anticipated. There are man-made disasters like terror attacks, burglary, hijacks, etc. They are also covered under this marine insurance policy. So here we have discussed the points connected with important clauses in the marine insurance policies, marine risks. One more important point, the clause which I forgot to include in this list is the jettison uh, clause. Jettison clause, which I forgot to include. This is the 16th important clause. Jettison in the sense, sometimes if the ship is getting heavy damage because of overloading of the cargo. Sometimes what happens, in order to reduce the high risk, certain goods are thrown out from the ship, thrown out from the ship. That is called jettison. Jettison means in Kannada it is called as ತ್ಯಜಿಸುವುದು, ತ್ಯಾಗ ಮಾಡುವುದು. ತ್ಯಜಿಸುವುದು ಅಥವಾ ತ್ಯಾಗ ಮಾಡುವುದು means, in order to reduce the heavy loss happening, some goods are thrown in the water, in the sea, to save the uh, vessel and reduce the loss. In such cases, if the jettison clause is included, to some kinds of goods can be thrown out and can be reduced. Any loss happening due to that throwing of the heavy goods out of the sea, to safeguard the sea, safeguard the hull, or safeguard the ship, that loss is also covered under the insurance contract under the clause jettison clause. Jettison clause, which I forgotten. Please remember this and enter into your notes. That is jettison clause. In question examination, what is jettison clause? Question may be arising. Jettison means the goods which are thrown out of the ship to protect the heavy losses happening to the ship, because the goods which you have thrown may be 1 lakh or 2 lakhs rupees loss you may incur, but you are saving around 1 crore rupees loss happening to the ship vessel by throwing that particular goods out. In certain situations it happens in the ship transportation, where the bulkiness of the goods or the cargo may destroy the whole ship. In such cases, the 2 lakhs rupees goods which are thrown is the loss happening because of jettison exercise of the power. If you can do that to safeguard the heavy losses, it is also mentioned in the insurance clause, in the contract clause, that is called as jettison clause. So thank you, friends. Thanks you for hearing the lecture. And any queries and requirements relating to this, you can ask me by WhatsApp and online. Thank you. Thank you very much.